their second quarter, they performed pretty well. And, they gave us some color about the peak season from an average daily volume growth. They're looking at mid-single digits. That could increase to high single digits because there's one extra operating day in the quarter or during peak season, I should say. So, they seem to be executing on their restructuring plan. The problem is that in their second half, they're going to be having a lot of headwinds that they're going to have to deal with. And those headwinds relate to, higher variable compensation expenses, and a less than truckload market, which they're the biggest player in that market, that has been pretty depressed over the last couple quarters, and it's going to probably continue to be depressed. And then you have, as you mentioned, the grounding of their MD-11 fleet following the tragic accident of a UPS plane a couple of weeks ago. So, you add those three things up, plus some other things, it's about a 600 million headwind to its earnings. So they have to deal with that. And some of the restructuring that they've done, probably, you're probably not going to see hit the bottom line, at least really directly until their 2027.
So the $600 million charge clearly not impressing investors, even with the beat in the quarter that ended. Is this a one-time thing, or is this something that could drag out beyond the second half of next year, excuse me?
Yeah, so on the MD-11s, I think expectations are, they should be back in service sometime early next year. I don't really know exactly when that's going to happen, but so you could view that as a kind of a near-term headwind. The variable compensation, that also is against difficult comparisons, so that's also short-term in nature and not something that is can continue. The biggest unknown for me, at least, is the less than truckload demand. The ISM manufacturing index, which has been in contraction territory for 35 out of the last 37 months, is indicating that less than truckload demand, which is mostly industrial manufacturing, is going to continue to be weak in the coming months ahead, because that index, the ISM index, is really a bellwether to an early indicator of where LTL demand is heading.
Lee, as you know, I am an expert on trucking. I know what LTL means and TL means. I had no idea that FedEx was the largest LTL provider. Do you like them that they're in that business, or would you rather them farm it out to somebody?
Well, that's a great question, Paul, because they're planning on spinning that out in June of next year.
Boom, banker.
Yeah, there you go. The argument always was that, maybe they could cross-sell their LTL and get more profitable parcel business. That model really might have not played out as much as they hoped. And so they also hope to get a better valuation, because that LTL business, while it's been pretty depressed, it does trade at a higher multiples. And so they're trying to unlock kind of some of the value there. So, it'll be pretty interesting to see how that company operates as a standalone provider. That industry is pretty consolidated and has a lot of pricing discipline. And we just hope that, once FedEx Freight gets out there and they're on their own, they're not going to try to use pricing to gain share. But we would note they are still the largest player. So it's not like they're looking to gain a lot of share anyway. So, but, it will be an interesting thing to see once that gets spun out in June.
I'm looking, Lee. Mm-hmm. I'm looking at Paul and talking to Lee. In the past 6 months, FedEx shares up about 29% total return versus UPS up almost 6%. Can you compare and contrast their approach to some of the macro challenges that faces the industry?
Yeah, so they're both in the process of restructuring their networks to deal with the new realities that, B2C or e-commerce is really where the growth is going to come from. And these networks were created a long, long time ago with the idea that, a carrier would go to a lawyer's office with 100 envelopes, drop off those envelopes, and pick up 50 envelopes. And that density really can drive profitability where, as if you get if you order rubber bands from Amazon, that one package that goes to your doorstep is a lot more expensive to deliver. So they're just dealing with that reality, and they've been slow to kind of change their networks. And UPS and FedEx are both in that process. UPS has done things a little earlier, I would say, and whether it is they spun out, or I should say sold their less than truckload business, the TFI, a Canadian provider, a couple of years ago.
Right.
They're all looking to try to gain more share of the small and medium sized shippers and get away from the large shippers like Amazon, which really aren't that profitable.